So, how long do I need to be self employed before I can get a mortgage? Gosh, I have no idea. We're going to talk about that next. Hey there, it's Ryan Skaggs for the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. And I'm going to give you an update on those interest rates first. So, the average 30-year fix, according to Freddie Mac, I've got a link below, is at 2.99. Now we're in mid-October, early October. We saw rates move up over the last week to 2 weeks. We actually got just above 3% last week, and now we're just back below. So we've been here before. If you look back 6 or 8 weeks before, we've already touched on these numbers. This does look like to be start of a trend going upwards. I've talked about that before, but without getting into too much more granular detail, we have seen a pretty average week, but over the last 2 week period, we've seen rates trend up. Now, let's talk about the actual topic for today. How long do I need to be self-employed to get a loan? Now, it's an interesting question because depending upon your loan program and the lender you may be working with, that answer could vary widely. So I'm going to try to give you some general answers. And to start with, typically you almost I don't know of too many programs that would be out there. Very, very small, niche stuff with probably higher interest rates that would allow you to have anything less than 12 months of self-employed income and at least a tax return filed. So I would say to get a normal program, a typical program with a decent rate, is you need to have at least 12 months of that self-employed income with at least one tax return that has been filed that you could provide to the lender. That way, the lender can look at the tax return and they can see the top line, right? The very top line on typically like Schedule C, which if I'm Ryan Skaggs Incorporated or if I'm a sole proprietor and, I'm just using my name as my business name, whatever it may be, then typically you'd find that on Schedule C. If you open up an LLC, a limited liability corporation, and maybe you're filing separate business returns or an S corporation, again, I'm not going to get too granular. Go talk to your CPA about this type of stuff. But if you file separate returns, we need to be able to see that top line. What is the revenue that you brought in? Now, a lot of times self-employed borrowers will tell me the top line. Us lenders, we care about the bottom. We care about what the expenses were to make that income, right? We care about what you actually are showing on those tax returns. So as crazy as a CPA can get with you in terms of deducting different things, whatever else, a lot of times we're looking at that bottom line number and maybe we're adding back a couple things. So that bottom line number, it's basically your profit, right? So you've got your revenue minus your expenses. That's your profit. That's what you actually made or lost for the year. That's typically what we're looking at. Now, a lot of programs that are jumbo, and I'll link the video below. We have a brand new kind of breaking news in the last few weeks of the new jumbo loan limit. So check out that. And that actually links to what is a jumbo loan. So you can really get granular and into the weeds on that jumbo. But typically, you'd have some programs that allow you to be self-employed for 1 year, but not 2. If you want to qualify for any program out there and get the best terms available, you really want to have 2 years of filed tax returns. So even if you started the business, it's 2021. If you started the business in 19, you've got filed returns from 19, you got filed returns from 20, and now you've been working into 2021. You've at least got 24 months. You've got 2 tax returns. Even if you didn't work the full year, there's at least income to be able to derive out of that from most lenders. So think about that is that for most programs, you want to look at 2 years. There are some opportunities for 1 year. And if you're just brand new self-employed, like, oh my gosh, let me give you an example. I'm 39 years old. Let's imagine I went from a W-2 job and now 90 days ago, I just started a brand new business and I'm just getting it off the ground. But let's imagine that W-2 job, I was able to put a lot into retirement, a lot into savings, a lot into investment accounts. Like I've got a good net worth out there for age, but I can't show any income yet. What do? I can't qualify. My wife's hitting me over the head. Come on, and we want to buy a new house, right? Well, in those cases, we can use what we call asset depletion. So There are opportunities if you haven't been self-employed for that 12 months to look at other loan programs that you may qualify for. Asset depletion as a whole, and I made a separate video on this as well, takes the assets that you maybe have in retirement and you can divide them over X number of months to drive some income. So there's definitely opportunities. Don't think if I haven't been self-employed for 12 months and have 1 year of tax returns that you just can't get a mortgage, but you really need to find a creative lender that has some more niche programs. Full disclosure, you may pay for them. They may be 1% more or 2% more in interest rate than a going market rate, but that doesn't mean you couldn't potentially refinance out of that loan program in a couple of years once you have that stability. So put your comments below. Let me know if you have any questions. While you're down there, hit that like button, hit that subscribe. I'd be forever grateful for the subscribe. Click that bell icon to be notified as I'm putting out weekly videos. My name is Ryan Skaggs. This is the Mortgage Minute. Thank you so much for tuning in, and we'll see each other again very, very soon.